Welcome back to Trader Sage. It's been a long time since I've been here. We're going to review price action on an ES price chart for today, inside day, and Monday. So far this week, probably go back into here. Who knows? Anyway, point is review price action on the ES chart or the NQ or the YM because we do trade divergences. And even if I'm just focusing on one asset class, ES, what happens on the NQ or the YM can indeed impact my decision making on this chart here. Anyway, so this is what I had drawn up for yesterday. This is a 4-hour fair value gap, 4-hour bullish fair value gap, and so I was just discussing pretty much to myself that when you think about all of this, like that I'm still focusing on market maker buy and sell models, because that's the one setup that I value, the one setup that I'm going to lock in for until, you know what I mean? I'm just going to lock in on one setup. That's the market maker buy and sell models. And it's almost like a cheat code because every other setup that I'm proficient at is contained in the market maker buy and sell model. Rather that's an optimal trading tree, or aka the OTE model. Rather that's a 2022 mentorship model. You don't even have to say all of that. 2022 mentorship model is literally a false breakout above a key level, followed by displacement and a retracement into an inefficiency targeting opposing liquidity. In this case, trade it back down into this imbalance, this inefficiency here. Anyway, so let's say hypothetically, like, what is that, right? Like discount to premium. And all right, this is a fine example of the market maker sell model one. And you can argue that this is the original consolidation, or you can argue that this is the original consolidation, in which case you'll still have a bearish bias to take out these lows, these relative equal lows here. So relative equal lows is here, but this low resistance liquidity run here. But that's only if price rejects this bullish fair value gap for our chart. But anyway, in terms of the ideal of a forced breakout, and you can argue that this was the run on stops. I'm actually going to argue that the Sunday's high was the run on stops. The reason for that is because I'm aware that this was a divergence between the NQ and ES, the running of this high, not necessarily this one, but this one back here, which supported prices going back lower. I don't remember how it looked, but we can get into that like right now. Right, so boom, right. Let me stop. So let's draw a line here. It's the same as this one, right? Sunday's high, like I said. I make it big and thick, so you can't miss it, right? So this is why I'm saying, right? Because yeah, it was a run above this relative equal highs here on the NQ, right? And here was a run above Sunday's high. This was a run above Sunday's high. So this didn't do it. So what sign did you have that price may want to go back lower, right? Obviously, false breakout here, followed by displacement and then retracement to this 4-hour bullish bearish fair value gap. That's good money. That's a legit trade setup. Also you go here, using this high, right? Turtle soup. You got a swing low here, followed by the retracement into the imbalance that's in a premium. And you're just gonna highlight this optimal trade entry here. So I use this low, pretty much the 930 low, and I used the, I'm about to adjust that, but I'm going to use the 815 swing high, and let's just turn on, make that bigger so people in the back can see it without zooming in. Right, so there's your entry into this imbalance, right? So you think about it, boom, boom, this is the midway point. So you can say, okay, this is a breaker. You have a breaker, right? High, low, higher high. All of these down close candles is the bearish breaker. And you have this imbalance here and this imbalance here, these bearish fair value gaps. Technically, you can use this, right? The bullish fair value gap, the midway point to get in short. Or if you saw potentially that price may want to go above the 50% into an optimal trade entry, then that's probably, I'm not necessarily saying that's the best bet, but that's an alternative trade model, right? So here, just using those this swing low, this swing low to this swing high, optimal trade entry 6309.75, and the high here is 6039.75. So that's like the sweet spot entry short. And let's see, you got 2 standard deviations. You can call it quits there. Call it quits there into this bullish fair value gap. So that would be here. Bullish 4-hour fair value gap, 2 standard deviations. That's good money, right? And your risk to reward, if you did balance it out properly. So let's say you wanted to make sure you got in 61.8. So you get in here, this first one at 6308, and you will have to risk on this time frame, 15-minute time frame. If you didn't, you just refuse to like include a wicks, it'll tighten up your risk, your percent R. But anyway, the stop will go here, 63.15. So you would pretty much be risking about 7 points. 7 points, right? So it depends, again, why risk management is so important. Why risk management is so important, because if you put on 10 contracts and you can only afford to put on 2, then obviously any type of drawdown will make you panic, right? And then that's going to impact how you, or where you place your stop. Where you place your stop and how eager you are to move your stop up or down, like depending on your direction of bias. If you have trust in your trade setup, then obviously you can hold the trade longer without necessarily moving the stop down until you see that price has cleared a particular area, or price has ran. Let's say you wanted to make sure that price cleared one. Let's say this is a 1-to-1 entry. So let's say hypothetically you got in at the 50%. So this is your stop loss. This would be an entry. So this would be your 1-to-1 trade. So let's say you got your 1-to-1 trade and you see this fair value gap here, and you see some degree of failure. Actually, it traded into that fair value gap and then ran up. This is why having target a high time frame bias in play, or high time frame targeting in play, that's why it matters, because here you have this bullish fair value gap and it traded down into it here, open here, traded down into here, open here, low, created a relative equal lows here before this candle was created, and then it ran back up right into this order block. So the question would be, would you be able to like handle that? Right? Probably not, because you're saying now I'm doing only 1-to-1 and my profit is pretty much decaying right here. But anyway, it continued down lower, so you really have to accept the risk. And it also depends on what type of model you are trading. So if it's not part of your trade setup or your trading model, then you should refrain from. But anyway, back to back to our discussion here. False breakout. We don't have that same swing high running Sunday's high here on the NQ, which gives us our sign that price does not want to continue higher. Likewise here would be the run. YM was relatively strong here because it cleared it over here. So you have a divergence. You have two divergences. One prior to the run above Sunday's high with the have that with the ES and the NQ, because they both at this point refuse to go higher. And then got higher, pull back into this imbalance, and then there's no break in structure yet. So there's no break in structure here, but it came back up, ran, stops again. You got that 1, 2, 3 drives pattern, a reversal pattern as well. You wanted to do that. And then that's when you have the failure here, right? So you already have, you have one divergence with the YM prior to the ES running Sunday's high. And then you have one after. You have one after, right? After the ES ran the high. So ES ran the high, NQ refused. This ran the high again here. So then you have the displacement and the retracement into this imbalance. So trade setup is very, very clear here. It is very clear here for that 2022 model, all false breakout followed by a retest of the. This is why it's like, oh, it didn't retest the level necessarily, except here. But that depends on how well you read price action, how well you read the tape. Because you don't need necessarily level 2 or the DOM to read the tape. Price action is king. Price action is king. And a lot of the things you can see in price. For example, like volume, where's the volume at? Like you can tell volume, whether it's true or false volume. You can see it in the bars. These bars was uncharacteristic to these bars over here, right? Accumulation, then it runs up, and false breakout. That's my number one, my A+ trade setup. Like, say it with me, right? Say it with me, A+ trade setup. It's literally the same 3 rules all the time, right? And then you have a run on stops, followed by a break in market structure. So here, run on stops, running this high, running Sunday's high, displacement. So low key, a run on stops, followed by displacement. And how do you recognize displacement? It's literally that quick rejection of the level of the run above, right? Quick rejection causing some type of imbalance here. So you're gonna update the rules in real time, but low key, that rule number 2 is understood when I say breaking market structure. That rule number 2 is part of rule number 3 for me. And then so you have rule number 4. We're gonna anticipate a retracement, let's say a pullback into an inefficiency. And I'm saying an inefficiency because it doesn't necessarily always have to pull back into a fair value gap. And also the definition of fair value may not be correct, because if your fair value gap, or the thing you call in fair value, is below 50% and you're expecting lower prices, that's not fair value. That's not fair value. Not all the time, at least. As you can see here, if you just counted the bodies, then on this range, 50% is here. If you just counted the bodies, then it wouldn't have reached 50%. Anyway, I'm highlighting that because you have this breaker here. That's pretty much support on price, support on lower prices. And I need to make that like a purple. and that's 63.05. And let's see, opening price here is 63.05. 63.05. This is the candle's closing price, and this is the candle's opening price, and we can do that right here, 63.05. So that's just showing the significance of some key levels. You don't necessarily have to trade that. That's not important if that's not part of your trade model. This is, and this is, right? If these wicks are like, treat wicks like gaps, then probably like 50% failed. Obviously, I have a higher time frame 4-hour fair value gap here. I meant to pull back and show that already, but I didn't. Today there was no high impact news. There was none yesterday. We have FOMC tomorrow, so that's probably a justification for price just being an inside day today. The question will be, was it tradable, right? Was it tradable? I ain't gonna hold you, man. I don't know. Hopefully what I said was like beneficial to you, because this, I don't know, kind of lost myself there. Anyway, so for me, for a very long time, even now, I'm trying to like, I want to get away from like looking at so many charts in terms of, let me stop looking for divergences. But man, them divergences, when they align together, you get these types of things, right? And it's really not impressive to see a run like this, unless it's part of your plan, because legitimately you don't need this type of run to make money. You can make money off this type of run, running this stop loss. This right here is a buy model, right? Run on stops. And then once price breaks, we're gonna say this level, because this imbalance here, once price trades, actually we have one here. So once price raised this level here, look, you can, once price raised this swing high, because of this gap here, it's really probably this swing high. Let me just do this, because it's like, what are you talking about, right? Anyway, this is just showing the swing highs and the swing lows. The greens are the swing lows. Swing low is a high. We're going to talk about the swing high. Swing high is a high with two lower highs on both sides of it. So that's why swing low is a low with a lower or higher low on both sides of it. That's this candle's low, this candle's low, and this is the swing low, right? So once price breaks this particular one here in the retracement into this order block, is holding above the mean threshold of it, essentially, and just eyeballing it. Anyway, that right there is a sign that price may want to go higher, and that's it right here. Pull back into origin. So also you have to consider time and price as well. Anyway, these are all signs that price wants to go higher for me. But anyway, that would be a buy model right here. It doesn't look like one. Let's see if we can get into that. All right, so again, we're saying that price ran. So see it here. Obviously price failed, but price ran this. And this one here, even better. But we're gonna focus on the ES. And so 5 minute. Right, still looks like right, it ran that low. Let's just make that, ran this swing low here, very shallow. And you got 5 minute break, another break, run on stops here, retrace into the discount array here, and then targeting this swing high, this high first, relative equal highs, and then this high. Probably not clear still, and you can do the walk down like you're supposed to. As the model dictates, you do the walk down after the stop run. you're not sure, even this was a buy model. This completion here, buy model too. Anyway, we're focusing on this one. Everything here. All right, so boom, ran the low. You don't see, as the 2022 mentorship model says, oh, wait for a imbalance, fair value gap to form, and keep doing your walk down. Me, I already saw what I needed to see, but you know, just stick to the script. It has to run on the stops there. Right, and here you go. Here you go. Overthinking and get you clapped, man. Overthinking, but you see? And what do you say? The bodies tell the story and the wicks do the damage. How's that hard? Anyway, so you're gonna just test that. That's the high of the fair value gap, 62, 92, 25, and just to check that, because I'm curious. 62, 92, 25, and let's see. 62, 92, 25. Yo, like, I ain't got nothing to say. All right, so boom, right? So you have multiple opportunities just off of this one fair value gap, but this is where you have to like have conviction that, okay, price wants to go higher. And this is a 1 minute chart, so you're not gonna go crazy and try to hold it until tomorrow, right? Unless you had a high time frame indication that price wants to go higher. Otherwise, this is a 1 minute setup. All right, so apologies, let's get back into it. All right, so we have this entry here. You also have to consider time and price, right? Kill zone is between 2 and 5. 2 and 5 for a setup, right? And it doesn't mean you have to take it exclusively in the window of the kill zone, but you have to start stalking the trade during the kill zone. So I would argue that all of this is the original consolidation here. We did have a run, actually didn't really run above it. That would be 6306, 6306. So relative equal highs here. So that's a target. Previous day's high is a target, and Sunday's high target. So you got 3 targets here, and you could have just tapped out at either one of them. Like here ran that high, here ran previous day's high, and this one ran Sunday's high. So you could some people call that being greedy. Some other people say, hey, you followed your trade model, right? So anyway, doesn't matter, right? So this is the point. So this was the walk down using the 2022 model for an entry here, and the reason to hold because it didn't reach this higher time frame draw on liquidity. And you have to argue, hey, this is the low price is currently in this range, dominant range 1, 2. It's also part of this range 1, 2, and that's where we at, right? It's also part of this range, but this is negligible, right? Because you mess with this, go back down here. So you eyeball it. It's technically at equilibrium right now, so price can go. It's all up to you. This is the inverted fair value gap at this point, so I would need price to hold above this if I'm using this 1 minute time frame. But I don't stay on this time frame for too long without having another high time frame reference, even if it's just a 15-minute chart, or for some people it's a 5-minute chart. I wanted to do more in terms of a lot, you know, but so then just go out here to kind of show you the logic. Fair value gap here. We're thinking discount, we're thinking premium to discount, and this was your premium array, this is your discount array here. You can see price reacting to all of that, and then you have to consider, is price holding above the equilibrium of this imbalance, which also corresponds to this inverted fair value gap. But yeah, so you have to see for yourself. It is kind of hanging out around equilibrium of this range here. So today was an inside day. Remember what trade I took? It's definitely before 9, definitely before 8. Oh my gosh, was it before 8? I definitely took, no, wasn't this? I took a short here. It looks weird right now. Like, how do I take this short here? Oh, 15-minute time frame. I think I went from, this is what I did actually. It's not, the level's not on here. I'm gonna take that off. This is what I did. I came to the 4-hour time frame, and I just drew out the bottom of this fair value gap. That's literally what I did. Drew out the low of this fair value gap, and I said, let's see what price does in relationship to this low of this fair value gap. And this is the next thing I did too. The low of this fair value gap and the low of this volume imbalance or liquidity void. And I chose this because it's a liquidity void or volume imbalance, and all I did was turn that blue like I normally do. This would be red or black, whatever you want to choose. And this is all I had, knowing that price was at a discount, and then it traded back above equilibrium into a premium of this 50% level right here. Here, couldn't hold, and then I just said, all right, price is gonna see what price does with this bullish fair value gap, because it shows a willingness to go higher because it's holding above the equilibrium, the consequent encroachment of this fair value gap. So it does show a willingness to go higher, but is it going higher? Right? All right, so boom. So I went from here to here. Did I? All right, so did it carry over? That's it right here, right? Right, so I don't think I caught. What did I catch, man? I don't know. What time did I trade? It's kind of crazy. I think I saw this, and then I saw this retracement on the 5-minute chart. Yeah, here we go. But I wasn't around for all of this. I caught this run here, and I actually stayed in the trade until about 9, till about 8:30. Did I? Man, I'm tripping. Let me see. Stand by one. Stand by one. Right. I've definitely seen this. Price wasn't able to hold above this volume imbalance. I definitely traded. I put the trade on somewhere around here using this bearish fair value gap. I think I got out right here. Got out right here. I had tech issues too. I was in the trade, and then I entered the trade on the computer. I placed a stop, let's say above here, and I placed an alert below here. So, and I was driving. And trading view was black. It wouldn't. I couldn't exit the trade. I got the alert that, oh, price went down to your target. Could be here, could be there, whatever. Price went down to your target, and I was trying to get out, and I couldn't. So I turned the phone off, turned it back on, and it was actually still like a perfect exit. But that was kind of scary though. So yeah, anyway, you have this imbalance here, lower time frame. You can see 62.86. So this is later on. I wasn't here for that. The opening price 62.8650. Right. This 62.8650 is the high of this imbalance. Okay. And okay. Right. So I definitely need to go and journal. This is part of it. I just need to, yeah, I saw all of this today and I'm like, okay, it's a 4-hour level, 4-hour fair value gap, 4-hour volume imbalance into a 4-hour bullish fair value gap. So this from here to here was a good enough run, as you can see, right? So it ran up into here. Let's make that thinner so we know that's not a high time frame level. You can see all of that. Anyway, I don't know how helpful any of this was, but I pray that we are all locked in, focusing on our goals and our aspirations, and that we are locked in enough that we can work towards everything that gives us benefit, right? So if it doesn't give you benefit, ideally you have enough fortitude to leave it alone, to replace it with that which is better. As they say, this is serious business. Serious business, and if you are running this like a business, then you can't, some things you simply can't afford. You can't afford to make the same business errors over and over and over and over without changing your business model to best suit your needs. Anyway, that's all I got. Thank you all for tuning in, and please like, comment, or subscribe, and do what's best for you.